the Federal Reserve, Fed, and the new Development Bank, NDB, unveiling two distinct central banking powerhouses. Central banks play a pivotal role in shaping economies and financial systems, but not all central banks are created equal. The Federal Reserve, Fed, and the new Development Bank, NDB, stand as two vastly different entities with unique missions, impacts, and characteristics. Here, we delve into a comprehensive comparison of these institutions, shedding light on their origins, functions, criticisms, and roles in the global financial landscape. 1. Mandate and membership. The Fed, established in 1913, is the central bank of the United States, tasked with fostering economic growth and price stability within the country. Conversely, the NDB, initiated in 2015, caters to the development needs of the BRICS nations, Brazil, Russia, India, China, and South Africa, by supporting sustainable infrastructure and developmental projects. 2. Ownership structure. Private Federal Reserve banks own the Fed, while the NDB is owned collectively by its member countries. This ownership distinction underscores the varying degrees of independence and accountability between the two banks. 3. Governance. The Fed operates under a board of governors, overseeing its functions and policies, while the NDB functions through a board of directors. This differentiation in governance models reflects the diverse nature of their operations. 4. Core objectives. The primary objective of the Fed is to ensure economic stability and growth by influencing interest rates, managing money supply, and implementing monetary policy tools. On the other hand, the NDB places sustainable development at the forefront, aiming to address infrastructural gaps and promote environmentally conscious projects. 5. Tools and instruments. The Fed wields an array of monetary policy tools such as open market operations, the discount rate, and reserve requirements to manage economic cycles. The NDB, in contrast, primarily utilizes lending mechanisms to foster sustainable development across its member countries. 6. Impact on global economy. With its substantial influence, the Fed's decisions can reverberate globally due to the interconnectedness of financial markets. In contrast, the NDB, as a relatively nascent institution, is still carving out its place on the global stage, gradually influencing sustainable development practices. 7. Transparency and accountability. While the Fed has faced criticism for its perceived lack of transparency and limited public accountability, the NDB demonstrates a more transparent approach, striving to involve member countries and stakeholders in its decision-making processes. 8. Crisis management. The Fed has weathered criticism for its involvement in the 2008 financial crisis, raising questions about its regulatory efficacy. In contrast, the NDB's short existence has shielded it from major financial crises, positioning it as an experimental entity with the potential to avoid past mistakes. 9. Global significance. Regarded as one of the world's most influential central banks, the Fed plays an integral role in shaping international monetary policies. Conversely, the NDB, while still an emerging player, offers a platform for BRICS countries to collectively address developmental needs and showcase their economic clout. In conclusion, the Federal Reserve and the new Development Bank embody divergent philosophies, objectives, and histories within the realm of central banking. While the Fed's century-long legacy and global reach have solidified its status as a financial giant, the NDB's innovative approach to development signifies a step toward more equitable and sustainable growth. Recognizing these distinctions equips policymakers and analysts with a broader understanding of how these central banks shape economies and influence global financial dynamics.
God bless you with fame and wealth.